All right, welcome back to the program. In case you're just joining us, it's time for our interview right now. Yvonne Mhango is joining me. She is the economist for Sub-Saharan Africa at Renaissance Capital. She's also the co-author of The Fastest Billion. Hello, Yvonne, and welcome to the program. Good day to you from Nigeria.
Hi, Nancy. Thanks for having me.
Thank you for joining us. Let's get started. Let's take a look at the response, the COVID-19 response of African economies. How would you rate our response so far?
I think it's been good. I think many parts of the world are surprised, actually, at how well we've weathered, at least on the health side, the response. There was a lot of concern initially, rightly so, given that a lot of our healthcare infrastructure is not as developed as it is in the western parts of the world. But I think our experiences with other pandemics, including Ebola, imply that countries were prepared and put in the right measures in order to slow the spread of the pandemic. So in terms of the health response, I think that has been better than expected, is what I would say. On the economic front, if I would go into that, I think we've seen Sub-Saharan Africa respond similarly to the rest of the world in terms of easing policy. On the monetary policy side, you've seen across the board interest rate cuts. On the fiscal side, though, a lot of countries in our region have been limited because we don't have the fiscal space or even the fiscal savings to put through the sizable stimulus packages you have seen in the developed parts of the world. And that's why you've seen a lot of requests or debate around countries receiving some sort of debt relief and particularly suspension of debt payments in order to release financing for healthcare and other measures to contain the pandemic.
You know, Yvonne, at the outset of this pandemic, in fact, when WHO announced that COVID-19 is now a pandemic, there was this shock that was sent across the world, especially for Africa. For those of us that are Africans who were like, for me, I was so trepidated and disturbed. You know, even a lot of people were saying, oh, Africa, you see people dying on the street, they will not be able to handle it, you know, well. But it seems now that even with the about 1.3 million cases and counting that we have in Africa, how would you rate the economic outlook? Is it as bleak as at the outset of this pandemic when the first case came into Africa in Egypt on February 14th?
Okay, so the hit to the economy has been taken. I think the estimate for growth for Sub-Saharan Africa for this year is around negative 3%. So that's for sure. We are going to see an economic decline on the continent. And it has set us back a few years in terms of development. So without doubt, despite the better than expected response to the actual health pandemic, on the economic side, we are going to take a hit alongside other countries in the world. However, it is encouraging to see that the numbers coming out for second quarter GDP are not as bad as we're seeing in developed parts of the world. And I'm speaking to two particular countries. Nigeria, as you know, published the second quarter GDP numbers at around negative 6%. And that's second quarter, as we all know, is expected to be the quarter when the trough of the crisis happened. So the worst growth rates will come through in the second quarter. Whatever comes thereafter should be a lot better. And what we're seeing is that it's been single-digit declines in the case of Nigeria. We've just had Ghana published yesterday at negative 3.2%, which once again is also better than expected. So while we are getting hit, we are seeing the negative growth, particularly for the second quarter. It is not as severe as we've seen in developed parts of the world. And also for some African countries, it does suggest we shall still see full year growth. And I'm speaking about countries like Kenya, where the IMF announced last week that they will be revising up their growth forecast from negative number to a positive number. So yes, we've been hit, but probably not as severely as developed markets.
How would you look at the economies of these countries, South Africa, Egypt, Morocco, Ethiopia, and Nigeria, because these are the countries that are most hit right now in terms of cases for COVID-19. South Africa, where you are right now, Tito Mboweni, who is the finance minister, even the central bank governor has also been speaking in terms of the contraction for the South African economy. I think on an unadjusted terms, about 17% contraction. But we saw this large number of 51% coming in from South Africa. And I was a bit taken aback. Inflation also, unemployment. You're looking at Egypt too. IMF giving Egypt some kind of funds. IMF giving South Africa also about $4.3 billion loan, the highest so far on the continent. IMF also gave $3.4 billion to Nigeria. Why I'm relating all this is because these are big countries on the African continent, and these are countries that have also been plagued by so much of the confirmed cases in Africa.
Absolutely, and part of the reason they've been plagued is because of the biggest and most developed countries on the continent. The connectivity with the rest of the world was a lot higher, and I think we've got a lot of imported cases, particularly in South Africa, before we saw the spread. South Africa, unfortunately, even before the COVID pandemic, was already in a recession. So one of the reasons why we're seeing such ugly double-digit contractions in South Africa is because the economy was already in decline. So yes, the economy has been hit, and secondly, I should add, the lockdown was on for an extended period. Just last night, President Ramaphosa announced easing of restrictions to level 1. So the most stringent was at level 5, where nothing operated, and we're now moving to level 1. So basically, the country has been under some form of lockdown 6 months, and that's a big part of the reason why you're seeing such significant declines in the case of South Africa. And that, of course, is going to have repercussions on its budgets. So there's budget deficit was projected on 15% of GDP for this year. It implies that the debt-GDP ratio deteriorates even further than it was before. So the hit to the economy is rather severe, as you can imagine, in South Africa. So the easing that was announced yesterday has been well received. Particularly the fact that the borders will be reopened on the 1st of October, at least for some countries, implies that at least the tourism industry can come back. In the case of Nigeria, aside from COVID, the oil price collapsed. So it had that double whammy impact. And in the case of Nigeria, it's been a challenge in terms of policy because inflation, as you rightly mentioned during your introduction, is in the teens. So typically, you have a central bank which would like to contain inflation or at least fight inflation, but then growth is in negative territory, and you can't have tight monetary policy in such an environment. So Nigeria is in a very tough situation, given its high inflation, no growth, and also on the fiscal side, Nigeria is particularly constrained by the fact that its revenue to GDP ratio is peculiarly quite low compared to any other country. If you compare it to Kenya, revenue to GDP ratio is around 18%. In the case of Nigeria, pre-COVID, it was 6%. Now it's probably halved. So the government is very constrained in terms of what resources it can put forward in order to provide some sort of stimulus in the economy, which is probably why you see your central bank in Nigeria doing a lot more developmental or playing more of a developmental role than you see in the rest of the continent. And one other area I should mention that's been hit on the continent is tourism. You mentioned Egypt. Tourism is important for Egypt, as well as our island nations such as the Seychelles, Mauritius, have been really hard hit by this crisis. And unfortunately, tourism is not about to bounce back anytime soon. You can imagine we're hearing about second waves in other parts of the world. People are anxious about travel. If they do travel, they're not going to go to exotic destinations. So it's going to take a while for tourism to come back. Those that are heavily exposed to that sector will experience slow growth, unfortunately, or at least weak growth over the short to medium term.
Hello, YouTubers. Welcome to Moneyline with Nancy TV YouTube channel. This is where we provide you with instructive business directions, processes, and guidance to help you assess the right resources to fund your businesses to withstand every form of internal and external shock. You will find here awesome informative videos on business, entrepreneurship, and lifestyle just to help you make informed business and financial decisions. Punch the subscribe button and let us drive you through the world of business. Please follow all our social media platforms on Facebook, on Twitter, on Instagram, on LinkedIn, and follow us for latest updates on our website. Okay, let's stick with South Africa a bit where you are, and let's take a look at how South Africa has been able to weather the storm, if it is indeed weathering the storm. But President Ramaphosa thinks that the economy is weathering the storm. Unemployment is high, inflation is also high. The economy, of course, was in a recession even before the pandemic. Just last night, like you said, President Ramaphosa announced that the lockdown moved from level 2 to level 1, September 20. We have, I think, over 653,000 cases in South Africa. As the most advanced economy on the African continent, how do you think that the South African economy has weathered this storm, vis-a-vis to the resources that South Africa has at the moment?
Oh, South Africa's been hit very hard. There's no two ways about that. It's been hit extremely hard. Lots of small businesses have closed, if not survived. The government did do a good job in terms of trying to provide grants, unemployment benefits. But as you can imagine, we also have a sizable informal sector, and a lot of people in that space were not necessarily didn't necessarily get access to those resources. So unemployment has increased, as you can imagine. Some businesses have not survived the crisis, so will not come through. So a lot depends on the I guess the government provides going forward. The government is due to announce some sort of reform program over the next few weeks, which will involve infrastructure projects and public works employment. So we're all waiting anxiously to hear what that means, because the country so desperately needs to grow and create jobs. So it's in a particularly dire situation. We were already in trouble pre-crisis, but right now there's a lot of anticipation in terms of what strategy the government has to try and get the country through this crisis.
Let's talk about Nigeria, because earlier on you were talking about our own central bank moving into more developmental programs now, because even during my analysis, Nigeria's MPC meeting would hold next week, Monday and Tuesday, with inflation at about 12%. So the MPC is in dire straits in terms of they are between perhaps the devil and the deep blue sea in terms of fighting inflation, which has been predicted to reach 14%, and boosting growth in terms of creating employment, which the CBN is doing right now. How do you think, or what's your own assessment of what the Central Bank of Nigeria is doing? Because a lot of analysts have also said, come on, guys, leave this developmental role for the fiscal policy people and take a look at what you're supposed to primarily do, which is fight inflation. So the CBN has gone beyond traditional policy tools.
True. On the one hand, as I mentioned before, the fiscus or the treasury, the government, is constrained in terms of how much it can do, because they don't have much in the way of resources in order to drive policy, which means the central bank has to pick up the slack. How much of that it picks up is debatable. We can debate that and argue how much they should be doing. But I guess what I'm trying to explain is part of the reason the central bank is stepping into a quasi-fiscal role is because the government doesn't have the resources to play the role governments do in other countries that are better resourced. So that's the one point to make. The other issue, I think, in Nigeria is that conserving a stable naira is very important to the central bank. And in order to do that, it does imply that monetary policy has to be firm and can't be overly accommodative, because the focus of the authorities is to have a stable naira. And that at times can be at the expense of growth, which is what is our concern as analysts. We saw it during the previous crisis when the oil price collapsed 2014-15, is that the authorities, in trying to sustain a stable naira, kept monetary policy relatively firm, and that was at the expense of growth and the economy, and contributed, in our view, to the recession. This time around, we've got COVID, as well as and the collapse in the oil price, which are all hurting growth. But we do feel that a little bit more flexibility around the currency would also allow for monetary policy not to have to be as tight, and for the central bank to focus more on the role, as you rightly said, of fighting inflation. Well, at this point in time, I do think what's being sacrificed is inflation, the current policy stance. So we are seeing inflation picking up, in part because of some of the policy, including the recent ban on accessing FX to import food. And that's all part of the central bank's efforts to try and sustain a stable naira.
Yvonne, which do you think is more dangerous, allowing inflation to run away while boosting growth, or tame inflation and a lot more people suffer, unemployment high, and growth is, not as high even as the population rate? Because you even see most countries in Africa, their population growth tends to be higher than what they're doing economically. In the case of Nigeria, we're growing at over more than 2.5%. Our population grows at 2.5%. We are not growing as much as our population growth is growing.
Correct. I think it's important to fight inflation. I say that because high inflation, particularly inflation in the mid-teens as it is going to now, erodes real incomes. So incomes, as you are aware, nominal incomes are not increasing. And as you've rightly mentioned, with population growing faster than income is, that implies that in real terms, householding or per capita income is falling. So it's important to fight inflation to allow for some real income growth. So in my view, I think the fight containing inflation, at least bringing it down to single digits, is very important. But unfortunately for Nigeria, particularly this year, given recent developments, inflation has taken a back seat when it comes to central bank policy, in our view.
What the African central banks are doing, do you think those measures are enough? Because even during this pandemic, during the lockdowns, during their MPC meetings, we've seen a slash of interest rates across board, from Egypt to Kenya to Nigeria to South Africa. Do you think that what the central banks in Africa have been doing have been enough and sufficient?
I think this crisis, central banks have certainly stepped forward and done as much as they can. I am of that view. Aside from the cutting of interest rates, there's been an injection of liquidity, particularly trying to target the most distressed firms. So I do think, given, as we mentioned at the beginning, when the crisis first hit and the general fear globally of what it would mean, not just for lives, but for livelihoods, that central banks did step up. And that's, I think, let me put it this way, the monetary policy response has been, I think, significant, also because they can, as opposed to the fiscal side, as I mentioned earlier, whereby governments may have wanted to do more, but they are constrained by the resource they have available. That was helped somewhat by the loans they got through the World Bank and IMF, but they're hoping for more, and more being through debt relief, or at least suspension of debt payments for this year and possibly into 2021, so that those funds that were initially intended to go towards debt servicing costs can be released for healthcare or other areas where they're needed.
You know, I spoke with Mohamed El Haran just a few days ago. He's the global or the chief economic advisor at Alliance. I don't know if you know him. He's also an author of The Only Game in Town. And when he was speaking with me a few days ago, I did also ask him the question about what global central banks are doing. And I picked something from what he said in terms of global central banks are doing what they're supposed to be doing. It may not be sufficient, but it's not also sustainable. Do you see that case in Africa? Do you see the responses being sustainable? Because it's like central banks have opened their taps since 2008, 2009 financial crisis. We're seeing them go beyond the traditional policy responses. But do you see that sustainable on the longer term in the case of Africa now?
I think if I'm following his thought, I think what he's speaking to is the quantitative easing, the QE, basically the creation of liquidity in developed markets. I think that's been a concern among some, because we've seen such a massive injection of liquidity in the US, the EU, in Japan. And there are concerns about all this money slushing around and what that could mean, and could it end up being inflationary, I think, is some of the concerns. Others are less concerned, given that interest rates are, in particular for what it means for debt as well, because interest rates are low in developed markets. But back to your question, are we as concerned about the monetary policy response being sustainable in Sub-Saharan Africa? I think that's less of a concern in our part of the world, because we haven't seen QE. We haven't seen that sort of sharp injection or significant injection of liquidity into our systems in our part of the world.
How about in the case of Nigeria? There's been liquidity in terms of interventions coming in as quantitative easing for different sectors, for agriculture, for entertainment, for different sectors, you know, just to boost the economy. Is there a concern there?
That's a fair point, and I think that's contributing to inflation. Frankly, I think part of the reason we are seeing inflation pick up is for reasons as such as you've mentioned. So where the risk is, or the concern in the case of Nigeria, yes, as you've rightly put, is on the inflationary front. Bringing down inflation is a lot harder than seeing it accelerate, as you can imagine.
So bringing down inflation is a lot harder.
Yes, it will be much more challenging going forward, yes, because it will hurt growth. To bring down inflation, they'll have to tighten up, and then growth is always sacrificed at the expense of bringing down inflation. Yes.
So having economic growth seems to be easier than chasing and fighting inflation.
You'd think so, but in Nigeria has demonstrated post the previous crisis that it hasn't been easy to get growth to where it used to be. They struggled to get past 2%, if you recall, just before the crisis. And many questioned, including our clients as investors, is why aren't we seeing those 5%, 6% growth numbers that we saw previously? We think part of the reason for that is that the consumer in Nigeria has been hit hard in recent years for various reasons. One of them, which I've spoken to already, is inflation. Real incomes have been falling quite substantially over a period of time. Job creation has also been an issue, so you haven't seen that come through as well. But I guess the message to you is that it's also not as easy to accelerate growth, particularly in the absence of investment. And that's been another issue in the case of Nigeria. A lot of the investment, foreign investment that we've seen, foreign direct investment I speak to, has been in the oil sector historically. However, in recent years, when there's been reform or review of the fiscal regime in the oil sector, we have seen a slowdown of that sort of FDI into Nigeria. And in other sectors, because of the slowdown in growth, we've also seen some hesitancy from investors in investing in those sectors. And I think what happened with ShopRite earlier this year, with them pulling out or selling their stake, also gives you an indication of how investors view Nigeria's outlook. So growth, I guess my point is growth is also not as easy to work towards. It's typically a domain of your fiscus or your government to try and bring in the environment conducive for growth and attract investors into the sector, whereas the central bank, you'd want them to focus on keeping inflation down so that real incomes remain positive.
Which country in Africa do you think will suffer the most? Because we are all suffering, but it may not be on the same level. Do you agree? Which country or countries do you think will suffer the most? And which countries do you think will weather the storm, come out well perhaps in 2021 and 2022?
Okay, so the countries we think will be hit hardest as a group are the ones exposed to tourism. And indeed, if you look at their growth projections for this year, double-digit negative growth. We're talking about Mauritius, the Seychelles, Cape. So as you can see, mainly those island tourist destinations, those countries will be hit quite severely this year, and we'll see negative growth. Another group of countries which will see negative growth is Southern Africa, and that's mainly due to South Africa and the countries that they trade a lot with around that border them, who also, given that relationship, also see negative growth. And in South Africa's case, it's because even pre-COVID, they're already in recession, and this has just dragged them down even further. With regards to the countries that we think will do pretty well, we think East Africa is actually faring pretty well. We actually had an East Africa conference a week ago, and what we're hearing from the likes of the IMF is that they'll be revising up their growth forecast for Kenya. They were previously forecasting growth of negative 0.3%, but that's likely now to move into positive territory, which is encouraging, and we expect similar positive growth out of countries like Tanzania, Uganda, including Rwanda. So East Africa is faring a bit more better because it's more diversified in terms of its GDP, as well as in some instances, as well as the export distribution. So that's helped it come through this crisis pretty well.
Do you think that the COVID-19 crisis can catalyze long-term change across the continent? Because even before this COVID-19 crisis, we're also disturbed, we're also fearful and concerned for Africa. But do you think that this crisis now would force us to have that long-term change, which we should have across the continent?
Nancy, I'd like to say yes, but I think the reality is when you're constrained in terms of how much funding and financing you have, even if the will is there, it's hard to push through those reforms. So I'm sure lots of governments are sitting there and thinking, you know what, we should do better. We should have had better health infrastructure, be better prepared for the next pandemic. But if you're sitting with coffers that are empty and you're fighting or trying to get creditors to try and ease or at least suspend your debt servicing costs for a bit so you have some breathing room, there's not much you can do in the way of reform, unfortunately. And that's, I think, is our biggest challenge. So ultimately, countries that will do well going forward are countries that will realize that in order to draw investment, a lot of that needs to come from private sector. It needs to come from foreign investors. And what they need to do is create a conducive environment for investors to bring in their money and help them grow their economies. I think the countries that would do well going forward are those who position themselves for those sort of investments. Because I think what's been exposed by this crisis is that Sub-Saharan Africa has very little in the way of fiscal savings. There's not much we can do with the financing we have to drive ourselves at a sustainable speed that will allow for real income growth out of this crisis.
It's not an easy thing, and just like you said, for us to do those reforms, because perhaps we would have done those reforms when the goings were good. In the case of Nigeria, when crude oil was selling at over $100 US, when perhaps some kind of macroeconomic environment was good across Africa. But if you take a look at it, so we have limited options right now to catalyze that much desired change that we have. So we have just a little room.
Yeah, that's the answer. The only way I see us getting through this in terms of trying to grow government revenue is to grow the economy. And in places like Nigeria, that will be a challenge to do. That's why for us, Nigeria's recovery will be a lot slower than, say, East Africa, because, as I mentioned, the consumer was already struggling. South Africa, for instance, their recovery is going to be slow because they're already in recession. It's not even deeper than they anticipated. So to come through that, it will be quite slow. And as I mentioned, resources are constrained. So what you're seeking to do as government is, how do I enhance the country's resources? And foreign investment is going to have to play a significant role in that regard. So the policies that governments put forward to attract investors is going to be important going forward.
Yvonne, what do you think will be the role of African diaspora in terms of, yes, bringing us out a bit from where we are right now? Because Africa has a lot of diasporans abroad doing so many things and bringing a lot of remittances. In the case of Nigeria, about $21 to $26 billion every year. I also know for South Africa, Africa has a lot of people in the diaspora. How can we harness the diasporan power right now? Or are the diasporans also suffering because of the pandemic, so there's little we can also expect from them?
Well, beginning of the crisis, that was our anticipation, that because this crisis hit the whole globe, we thought even the diaspora will be hard hit and will be able to receive the remittances that we'd enjoyed previously. And you've rightly mentioned Nigeria, in absolute terms, receives the most on the continent, at least in Sub-Saharan Africa. However, we are seeing in cases of Kenya, for instance, that remittances have held up. They haven't fallen off as much as we anticipated. The recovery has actually been a lot quicker than we'd anticipated, which is great. How can we harness it? And I think creation of instruments like the diaspora bond that can be targeted towards infrastructure, for instance, would be probably some of the avenues some governments can take, particularly those that enjoy sizable remittances, such as Kenya, Nigeria, of course, we've already mentioned, but there are several others. So yes, as we said to start, governments are going to need other sources of income in order to enhance what they have. And yeah, tapping into the diaspora will be important going forward.
How about the role of multilateral institutions? And let's come now to the African Development Bank, because we've talked about World Bank and IMF. The AFDB says, okay, launched a 3 billion social bond. Akinwumi Adesina has been re-elected for a second time. How do you think that the AFDB as an African bank, so to speak, as an African development institution, can help, catalyze us to where we should be from where we are right now, in the middle of the sea?
Well, I think the African Development Bank has done a good job of including its capital base so they can lend more. And I think that's a good start. So it does imply that for the continent, there's more funding available going forward. But of course, there needs to be the fundable project. So a project that is considered worthy by the likes of development banks. And I guess it's up to various countries and governments if they want to tap into those resources to ensure that the projects that they want resources or at least funding for are fundable and attractive projects. So I think, I think the African Development Bank is ready to try and assist the region to lift them out of this crisis. But as you can imagine, it's going to be competitive. We are 50 plus countries, as you mentioned, to start, and they don't have enough funding for all our projects. So it's be up to the savviness of individual governments providing bankable projects that the African Development Bank can fund.
Let's talk about one sticky area concerning Africa's development, which is China. China into Africa. You know, we're seeing, even at the beginnings of this lockdown, we saw that some countries in the G20 says they would give some kind of leeway to some countries that as developing countries in terms of debt and all of that. As we all battle this pandemic, what do you think China's role will be on the continent? Because China has a lot of developmental projects across Africa.
True. So something this crisis did expose as well is how much China has become an important and big creditor on the continent. So they lend to several countries. I think in Kenya's case, for instance, it's the biggest bilateral creditor. So it is an important lender to the continent. And with regards to the discussions I mentioned earlier related to debt relief or suspension of debt service payments, I'm aware that China has been speaking to various countries that have requested to be considered when it comes to such. Angola, I think, is one of them. So in some instances, yes, there has been review of those debt service payments. So I think China in that regard has come to the party in terms of trying to alleviate the worst of the pandemic on the region. But I think this, as I've said to start, has revealed how significant China has become in terms of being a lender to the continent.
What should investors do with African markets right now? What are people asking you for over there in South Africa when people are looking at African markets? What African markets are they even really looking at, if they're looking at it at all, despite this pandemic? And what are those investors saying about African markets right now?
So on the equities front, growth is important. If you're going to invest in a brewery or some consumer firm retailer, you want to see that there's economic growth because that translates into household income growth, right? That people are able to go out and spend. So the absence of growth has, of course, hurt a lot of the prospects, and you are seeing it in terms of valuations of these firms. Of course, in some instances, you always get some companies who fare crises better than others, and those are identified by the investors. But growth is important, what I wanted to highlight. Another issue that's important to investors, particularly in equity markets, but also in debt markets, is repatriation. That's been become an increasing issue this year, Nigeria being a case in point. Investors that want to repatriate dividends, interest income, or capital, some of them have struggled or have had to wait several weeks before getting their money out. And that's an issue for investors. Investors want to be able to invest in markets whereby they need to take their money out, they can do so easily. So ease of repatriation has been an issue. And if they're concerned about repatriation, then you see less inflows into those economies. And Zimbabwe is also another case in point. I was part of a webinar yesterday with Zimbabwe's finance minister where we were talking about the Victoria Falls Stock Exchange. And one of the reasons they thought that will appeal to foreign investors is because it will be dollar denominated, unlike the Zimbabwe one, whereby you buy Zim dollars, and then when you want to exit and buy US dollars to exit the market, you're unable to do so due to shortages on that front. So repatriation is very important as well for investors in the continent.
Let's bring in the Fed into all of this, because the Fed is also quite important, with Jerome Powell announcing that the rate will be near zero from now till 2023, and inflation also being looked at around 2%. How does that impact African markets? And with it, is the U.S. election built for November 3 for President Trump that has taken this protectionism posture? How do you see it affecting the African markets moving forward?
Okay, so in terms of the Fed decision to keep interest rates low for extended period, or at least until inflation is over 2% for some time, that's positive, I think, for frontier and emerging markets like those in our part of the world, because it implies that our yields, our interest rates on our debt products will be attractive to investors. So whereas in the developed world, given the Fed's policy decision, which is dovish, interest rates will be low, it does imply that our Eurobonds and other fixed income products will be attractive for investors, because they'll have relatively more high and attractive yields. So that's one point. It also means the dollar, US dollar that is, remains relatively weak for an extended period, which is, I guess, positive for currencies in emerging and frontier markets as well. It does imply some relative strength compared to previously, or at least a year ago. With regards to the elections, yes, Donald Trump has had a very protectionist, US first policy stance. Would the Biden win change? I think in terms of international relations or diplomacy, they may not be as closed off as the current administration, but I don't think we'll see a significant change in trade, for instance, towards Africa. I don't see that being the case. I think where you may see some impact is potentially around the relationship around China. But even then, I don't think to be a marked difference from what we've seen. Maybe the rhetoric will be less combative. But when it comes to Sub-Saharan Africa, I'm not expecting a material change even post a Biden win.
Yvonne, I think we'll leave it at this point. Thank you very much for speaking with me today. Thank you.
Thanks for having me, Nancy. I enjoyed that.
Thank you. Thank you for watching our video. Please hit the subscribe button below, turn on post notification to follow all our updates.